Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases for the final 2 weeks of 2025, from December 22nd through January 2nd, 2026. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from December 22nd to January 2nd, covering this holiday period's important events in GMT. Please remember to adjust to your respective time zones. Important holiday notice, please note that these are holiday-shortened weeks, with many major markets closed from December 25th through December 26th for Christmas, and January 1st through January 2nd for New Year's. Trading volumes will be significantly lighter than usual, which can lead to increased volatility and wider spreads. We strongly recommend reducing position sizes and being extra cautious during this period. Let's dive into this period's events. Monday, December 22nd starts with Canadian PPI data. Tuesday, December 23rd brings RBA meeting minutes, Canadian GDP monthly data showing an expected contraction of -0.4%, US prelim GDP quarter-over-quarter expected at 3.2%, US core durable goods orders, US durable goods orders, and USCB consumer confidence along with Richmond Manufacturing Index and industrial production. Wednesday, December 24th is Christmas Eve, featuring only US unemployment claims and a German bank holiday. Thursday, December 25th is Christmas Day, with most major markets closed, but with some Japanese data will be released such as unemployment rate, retail sales, and industrial production. Friday, December 26th is Boxing Day, with continued bank holidays across most major markets. Monday, December 29th sees markets reopening with Dallas Fed Manufacturing Index. Tuesday, December 30th features FOMC meeting minutes. Wednesday, December 31st is New Year's Eve, with only US unemployment claims and Chicago PMI data, while some markets will be closed. Thursday, January 1st is New Year's Day, with all major markets closed globally. Friday, January 2nd continues the New Year holiday with some markets remaining closed. The key market-moving events during this period will be US GDP figures on Tuesday, December 23rd, and Canadian GDP data also on Tuesday. The FOMC meeting minutes on December 31st will also be important for those trading during the year-end period. Now, let's go to the technical analysis. This week, we'll focus on the US dollar against the Canadian dollar and the US dollar against the Japanese yen, as both instruments have shown strong bullish momentum heading into the holiday period. Let's start with the US dollar against the Canadian dollar. Looking at the daily chart, the dollar-Canadian dollar pair is currently trading around 1.3801, showing signs of a potential bullish breakout. The price is moving higher toward the 20-day moving average after a few days of consolidating below this key level. The stochastic oscillator is moving higher toward the overbought area, indicating growing bullish momentum. Looking at important levels, the US dollar against the Canadian dollar has support at 1.3724 and 1.3619, while resistance can be found at 1.3871 and 1.3967. Tuesday's Canadian GDP data will be crucial for this pair. The monthly GDP figure is expected to show a contraction of -0.3%, which could provide support for further US dollar strength if confirmed. The consolidation below the 20-day moving average appears to be ending, with the pair now attempting to break above this key level. A successful break and close above the 20-day moving average could open the path toward the 1.3871 resistance level. Weak Canadian GDP data on Tuesday could provide the catalyst for this breakout. However, traders should be mindful of reduced liquidity during the holiday period. Now, let's turn to the US dollar against the Japanese yen. On the daily chart, the dollar-yen pair is currently trading around 157.77, showing strong bullish momentum after Friday's surge. The price moved strongly higher on Friday, breaking above the 20-day moving average after a few days of consolidating around this level. The stochastic oscillator is moving higher toward the overbought area, confirming the strong bullish momentum. Looking at key levels, the US dollar against the Japanese yen has support at 156.44 and 154.68, while resistance stands at 158.95 and 160.66. With Japanese markets closed from December 31st through January 2nd, any major moves will likely occur before or after this period. The decisive break above the 20-day moving average on Friday is a significant bullish signal. The next target for bulls will be the 158.95 resistance level. Given the strong momentum and the stochastic moving toward overbought territory, the pair could continue its upward trajectory toward this level in the days leading up to the year-end holidays. Both instruments could see heightened volatility despite the holiday period. Traders should be particularly cautious as reduced liquidity during the Christmas and New Year holidays can amplify price movements, create wider spreads, and lead to unexpected gaps. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.